Hi traders, this week a lot of Fibonacci levels that I think are critical for the Forex market. First of all though, before we look at the market, be aware of these disclaimers. This one explains that the webinar and video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar and video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's kick off with the Euro Dollar weekly chart. We see the prices basically making a triangle just below all of these bottoms, in fact. So it looks still like in a downtrend, but it is struggling to break below the 105 and the bigger bottom back from 2015, 2 years ago. So is this a bounce for a bigger correction to stay within the bigger consolidation zone, or is it a pullback for more downside? I'm looking at a break for the green line for more downside. I'm looking for perhaps a break above the orange line for a bigger correction up to perhaps 110. So those are the key levels. When you look at daily chart at this moment, you can see those trend lines here, and you can see the prices bouncing off this green line, making a bigger correction at the moment. When I put a fib from this top to this bottom, you can see the price is approaching the 61.8 and it's reacting to the 61.8. And I think that basically the 61.8, the 78, and the 88.6 fib levels could be strong resistance spots. I'm looking for turnarounds at those fibs and looking for then perhaps a break below the green line. Now, if price does not respect these fibs and manages to still break above them, and importantly break above also this top, in that case, of course, my bearish perspective at this moment is out of the window, is invalidated, and I think there could be a bigger upside push on higher and lower time frames. Now, for the moment though, I'm still bearish. I still have my bearish cap on, and I think that this is just a correction within a downtrend start. This is the first push. This is a correction. The blue circle is kind of the pullback, and this could happen. Now, whether it's the 61.8 fib or the 78.6 fib, that is something that, in my opinion, still remains to be seen. And I do actually think that the 78.6 fib has a slight advantage there. And I'll tell you why. Because this momentum could be finished. It's possible. But it's pretty strong. It's a pretty strong push. And I think it looks like a good momentum. And I think that typically momentum of that strength could see a follow through higher to a deeper fib like the 78.6 fib at 107.50. So that's why if I had to choose, I would rather go with the deeper one. I think the 61.8, as you can see, is causing some retracement. I just don't think it's going to be the reversal that I have in my mind at the moment. I think that's probably going to be this area. So from that perspective, you can see, of course, price already breaking through these resistance trend lines, as I already indicated with my wave analysis last week, and that indeed happened. When looking at the hourly chart, you can see those breaks again, and I at the moment have this fib on, from this bottom to this top. That's the best fib because of the waves at this moment. And let me just remove this particular fib so you can see the hourly fib a bit better, excuse me. And as long as price stays above the 38.50 zone here, I think it's in a bullish environment, and this could easily be a correction for one more push up, especially if this is corrective. In fact, if this is a bull flag, a triangle, I think that this could be easily a pause for more upside. That is typical for a wave 4, and I would expect a continuation. Now, if price breaks below the 50 fib, it's not a wave 4 anymore in my opinion, and it's most likely then going to be a reversal back down to test support down in here around 105.50. As long as price basically does something like this and makes a corrective pattern, stops at the 38 probably is the most likely turning spot, or even the 50 fib, those would be ideal spots for wave 4. A break above the bull flag or triangle could see the breakout towards 107.50. We'll be talking about the euro dollar a lot more this week. Not only the euro dollar, but of course many other Forex currency pairs and of course financial instruments in general. Nenad tonight with his weekly recap. I'm taking a look at strategy on Wednesday, intraday trading on Tuesday. Wednesday, Nenad has live trading session as well. And Thursday, we take a look at education and taking a look at trading approaches that are connected to volatility. Okay, let's continue with the pound USD 4-hour chart. You see that price is breaking out of the downtrend. The bearish channel was so nice. very harmonic here in its pattern, very good, sturdily built with a good angle. But price has broken above the resistance, multiple resistances. No matter how you draw it, price is breaking above it. So is this a reversal or a retracement? Is this a reversal back to a bullish trend, or is it just a retracement? And will price then stop, turn, and go back into the downtrend? For the moment, I think it's still a retracement. I'm expecting price to stop at the 38.2 fib, turn and fall down to 120, which is a psychological round level, obviously, and also a bottom here on the left. So I think that that could be a decent target, 120, 120.50, for that downtrend to continue. And of course, price could perhaps break below that eventually later on. But for the moment, I rather, mention the conservative target, and then let's see how price responds to 120. Now, if price does not stop at the 38.25, I think that is the most likely turning spot. You can see on the hourly chart, the price is making an upside. It broke above these resistance and this resistance. I think there could be some correction, but I wouldn't be surprised if price makes that last push up to the 38.2 fib, and that is a turning spot for more downside. All right, that's my main kind of expectation at this moment. I'm looking for candlestick patterns, as you probably know me by now, at the 38.2 fib. Even here, it's possible to look for a candlestick kind of pattern for that last push up. That's a bit risky, I think, the green circle, but it's possible. The red circle, I think, is better because I think the overall trend is still down. So I think that's the best one, in my view. If price does not stop at 38.2 fib, I still think it's a downtrend. Basically, I think it's a downtrend as long as price stays below the 50 and 61.8 fib. It could turn at those fibs too. I think the most likely fib is the 38, but those deeper fibs might work as well. Now, if price were to break above the 61.8 fib, then I have some hesitations about this downtrend. In fact, there could be a bigger bullish reversal if that happens. Now, dollar yen, basically it's doing what I expected with not breaking this previous bottom here, then breaking above resistance, breaking above resistance, breaking above the top. But it's making a bigger kind of correction here than I expected. I thought it would be more of a flag, and then I was looking for a break of the flag. Well, we didn't have a flag break, so that's pretty simple. At this moment, I think there are two scenarios. This could be actually still a correction within this correction. We could see a bigger move down to test the bottom in here, or this could be in some way maybe even a hook back from our upside like this. So I'm curious whether price will respect this support line. I'll make that green. That makes it a bit more logical. All right, so let's make that green right there. Great. So I think that this is still possible that this is a pullback really after breaking the resistance top. It could be a pullback. So I'm curious how price will respond to the 50 fib, for instance, and later on perhaps the 78.6 fib. I think that especially the 78.6 fib, 88.6 fib, are good bouncing spots for a potential continuation of this uptrend. Now, if price does not stop at these fibs, I'm going to reverse. I think that could be leading to a bigger breakout to the downside, down to 113, down to 112.50, perhaps even 112, and there could be breakouts to the downside. But as long as price stays above these fibs, I think that those could be bouncing spots. If it breaks, there could be a bearish breakout. Now, AUD, I'm not a big fan of the Aussie at the moment. I do think that it's in a downtrend still. Look at the red line. In my view, lower lows and lower highs. It is above the weekly pivot point. So it is a bit of a mixed bag. Trend is still down. So I think that this particular spot and the 38 and the 50 fib are still resistance levels, and they could be turning spots for a downside. Now, I'm not a big fan of this particular currency pair because this could be a correction of this upside. So it is a bit not as clear, I think, as other currency pairs. I would probably not be jumping for joy to trade this one. It also depends on how price. If price does bounce here, I'll keep an eye on how it approaches this bottom with how much momentum and if it can break this bottom and then continue. If it does break that bottom, there's a good chance for price to move down to 74.20 S2, weekly S2, and a minus 61.8 target. So keeping an eye on this resistance zone in here to see if there's some candlestick patterns, but I'm also keeping a very close eye on how price responds at 75.40 for potential head and shoulders, and also the bottom at 75 for potential double bottom. All right, so that's something I want to be cautious of. More analytics, more webinars, more articles, more about platforms on admiralmarkets.com. Hope to see you there and hope to see you soon. Thanks for joining. Wish you all great trading. Cheers.